and here in the States, and it's all made sense to me. But about a month ago, you made, I'm a regular. I try to listen to your show, and about a month ago, you said that you made a comment. It was a quick comment, but you said, well, I don't know, interest rates are getting kind of pretty low, and maybe you kind of almost seem to be breaking a little in the sense that maybe it's not such a bad time to buy a house, at least if you could, get a very big loan.
Well, I mean,
and also you also said, I know that, I guess 2 or 3 weeks ago you said that you were, albeit reluctantly, going to buy a house down south in Florida.
Yeah, I'll answer your question. I did buy a house in Florida.
Oh, okay.
And I am putting a 20% down payment and taking out a Fannie or Freddie mortgage, one of those, government guaranteed mortgages, and my rate should come in, under 5%, 4.75% to 5%. Loan. I was a reluctant buyer. I didn't buy it because I thought I was getting a good deal. I still believe that the property that I bought, I believe that similar houses will sell for less a year from now than the one I bought, and so I don't think I was doing it more of a. It was more of something for my mother and my aunt, and it was just something that they really wanted to have some stability, and they didn't want to keep renting, even though renting was a financially better option, I believe. From an emotional point of view, they really wanted a place that they were going to live in for the rest of their lives, and they didn't want to worry about moving, and they wanted to do certain things. My aunt is in a wheelchair, and so there are things that we wanted to change the house in certain ways to make it more accommodative for her needs. So that's why I bought it. But the one thing I do think does make sense, to the extent that you can borrow a lot of money. There's no way, and I could have paid cash for this house.
Right.
The one appealing prospect of the whole transaction is that I now have a mortgage of almost $400,000, and my monthly payments on that mortgage are a little over $2,000 a month. Now, my feeling is, 5 to 10 years from now, the stamp that I put on my envelope to send that $2,000 into the bank could be $2,000. So basically what happens is, I end up wiping out that debt because of inflation. So if I make money on this house, it's not going to be as a homeowner. It will be as a debtor.
Right.
But if I could have borrowed that money and bought something other than U.S. real estate, like gold coins, I think I would make a lot more money. The thing is, you can't borrow a lot of money to buy gold coins, not at 4 3/4. The only thing you can borrow a lot of money cheap to buy is real estate, because that's the only thing the government will guarantee. And the only reason you can buy. Now, if I tried to get a jumbo mortgage, I probably couldn't even qualify. I mean, that's how sick it is. It's funny. I got my FICO score. And my FICO score, wasn't even that good. It was like 620, or I was surprised that I didn't have like an 800 FICO score, because I have no debt. I don't owe anything. I have no credit card debt. I have no auto loans. I owe nobody. I don't owe anybody anything. I have a zero balance on every one of my credit cards. Every one of my credit cards is paid in full every month, and I've never run a balance.
Just
and
like
apparently,
me.
when I talked to this loan guy, and he told me that some of the reasons that my credit score was reduced was because I have unused credit. I said, well, of course, because I pay it off every month. And also, apparently, I had opened several accounts recently, which hurt me. And what happened was, I rented a much bigger house, and I went and I bought a lot of furniture, and I bought some more clothes. And, of course, every time you go to a department store, they say, open up a credit card, and you get 15% off. So I opened up a card, got my 15% off, and then paid it in full. And I did that a couple of times, and so apparently that hurt my credit. And then I think there were a couple of inquiries into my credit, because when I rented this new house, a couple of people ran my credit report, which I think was higher at the time than it is now, because that's before I bought this stuff. So, but it's amazing, because there are probably people out there that have much higher credit scores than me that are actually in debt and that actually need to borrow money. I don't need this money, right? I only want it because it's so cheap, but I don't need it to buy the house.
Okay,
so it's funny. But if I was probably trying to get a jumbo mortgage right now, I might not even qualify.
Yeah, that's wild.
Or it'd be a pretty high. It'd be a pretty high rate. I might have to pay 8 or 9% for the money or something like that.
Well, the reason I'm asking is because I have been thinking about buying a house, but I follow you. You know, like I said, you're the only person that I've heard practically ever in the world of investing that has made common sense and has been almost 100% accurate. And so,
yeah.
Of course, I have to follow what I believe is.
Yeah, you've got to look at your own market and the various circumstances. I'm certainly paying my mortgage at this low rate. I'm certainly going to be paying much less on a monthly basis to rent this house for my mother than the one that to buy this house than the one that I rented. But of course, I had to pay. I had to join the golf club. I had to join the association. I had to put a down payment. There's all kinds of pays. But as far as my personal, I'm still renting my residence. And I'm looking around at the house I live in and what I pay to rent versus what the guy would want to sell the house to me for. I'd be an idiot to buy. An absolute idiot. Anyway, thanks for the call.
Thank you.
Next caller is Eric in North Carolina.
Hey, Peter, can you hear me?
Yeah, loud and clear.
Hey, I appreciate you taking my call. I have a question for you, but before I do, I just want to make a quick comment. I appreciate the fact that you open up your phone lines to everyone without screening them across the board. And I know kind of an interesting or repeating theme over the recent past is for callers to call in and complain about their accounts and how they perform and things like that. And I just want to let you know that I've had family members, friends of family members, personal friends open accounts with you over the past 6 months, and they have done extremely well. And they've called me up and they've said that, if they had kept their money in the American markets and kept the money in their current situation, with them continuing to fall over the past 6 months, they would have gotten crushed. And with the dollar coming off its highs and the fact that they were in a lot of commodity accounts, they were in a lot of metals, they've done very, very well. So I just want to throw that out there for your sake, and that it seems like you've just been getting killed recently as far as calling it. So
yeah,
anyway,
well, it's slowed up. I mean, it's all it's all going to be in waves. When you're looking at short-term performance, obviously, as markets are moving up and down, there are going to be people who come in before a decline and they're down, and then there's people that come in after the decline but before a rally, and those people are up. It's my opinion that years from now, everybody's going to be up. Obviously, the people who came in after a dip, are going to be in better circumstances than the people that came in at a peak, although hopefully a lot of the people who sent money to me at the peak prices used the recent decline as an opportunity. I'm just looking at one of the stocks, one of my bigger positions, a stock in New Zealand, just came out recently with better than expected earnings, and then they announced yesterday that they're paying down debt without raising money, and they're increasing their dividend. I mean, so everybody is saying how bad things are, yet here's this company that increased their dividend. The stock just hit almost, I think it's 1 or 2% off a 2-year high. The stock has moved up in the last 3 or 4 months about 50%. Now, it's obviously, if somebody sold that stock a few months ago because it was dropping and they were just panicking, what they didn't realize is they were selling a company that was actually getting more profitable, that was about to raise its dividend. The fundamentals of that stock never went down, but because everybody was selling, prices were dropping. And I was trying to make the point to my clients that the price was irrelevant, that we were in these stocks to own them for the long run and to collect dividends, that if people were foolish enough to sell, then it was their problem. There were a few exceptions. There were a couple of stocks that we bought that ended up having problems that I didn't anticipate because they had problems with their debt, and they were mainly companies in the commodity space and one company that was a utility. And so some of these stocks, a couple of them might not come back. But the vast majority, 95+% of the stocks that we bought, I think will come back. In some cases, they've already come back, and they're now higher than they were. But ultimately, we're not selling these stocks. We're collecting the dividends. And the fact that the stock is raising the dividend means it's more valuable. Even if the price is still lower than it was, the dividend is more. And I think in the long run, everybody's going to do well. Now I know, and it's not just that stock. There's a lot of stocks that have come up dramatically in the last few months all around the world. I mean, the U.S. market is up too. I think the U.S. market has rallied about 20% from its lows. But I would guess that most of the foreign markets expressed in dollars I think we've seen rallies of 30 to